On Thursday 29th of August, I took a long position at this fair value gaps low. Throughout the week, I was expecting price to come up and take this buy side liquidity. However, given we start seeing some displacement on the lower time frames at the end of the month, I started to shift my prediction. I didn't expect price to run up to these highs anymore. However, I still, because the order flow is bullish, price comes into a bullish fair value gap below an order block, I was anticipating some kind of a short-term trade. However, the nature was way too aggressive, and for me to take an aggressive trade, it can't be, especially when there's two fair value gaps like this. I can't take a trade aggressively on this first fair value gap. I have to wait at least price taps into either this level or the 50% off this fair value gap. So the trade was taken at 4:15 a.m. New York time, so around 9:15 London time, and let's just have a look at how price played out at that time. So yeah, we start to see a strong aggressive move down, which is exactly what I want to see when I want to go long around these point of interest anyway. And I took a long position as price formed this doji candle. Stop somewhere here, targets hold have taken out along the way. Yeah, so because we have this fair value gap right there, ideally I should wait for price to come down this, and also because I don't see any sort of accumulation or any kind of consolidation happening before price makes this low, which is something I normally wait for. Because of that, I exited that trade straight away, and then after I was hoping price would tap into that daily time fair value gap. It doesn't, and I don't enter this trade. So, but this is exactly the kind of pattern I want to see if I want to go long at this point of interest, and then price starts to move up. Ideally, if that had tapped into that daily time frame fair value gap, I would have gone long around here, stops below this low, and then along the way I would have taken targets this high. Maybe I would have taken half position before that and then another half at that high. Still, because this is a counter trend trade, as price has been displacing bearish with this, failed to make a new high, start putting in imbalance, which has been holding. So yeah, not a good entry and not a good location. So yeah, this is definitely a bad trade. And the next day I wanted price to come into that 50% mark and find support, but it's Friday. Let's just go to the 15-minute time frame. It comes into that level eventually Friday evening, which is not a time I'd normally trade anyway. So yeah, the wrong point of interest and just not a location that I want to be trading. Price eventually comes down and taps into this level. On the 5-minute time frame, it's a lot clearer with this bearish bullish engulfing candle, displaces, comes and holds this bullish fair value gap. So yeah, this could have been an entry. However, price had pulled up and then pushed down, and this is something honestly I didn't pay attention to as much. Also, this happens during the London close session, so it's a decent session to be looking for entries. On the 15-minute, we get this consolidation followed by this aggressive sell down. We also form this fair value gap, which turns into an inverse fair value gap. So yeah, this probably would have been a good entry on the Thursday, especially with this engulfing candle. And because it didn't tap into this 50%, I was hesitant on taking this trade and could have taken targets off at these highs and taken targets along the way. It's just something to note for future. But yeah, the initial trade was bad and I got out straight away because I didn't like the point of interest and I didn't like the actual entry.